Now let's move on to the markets. Like I did mention, the market fell back yesterday. It's been down for 2 consecutive sessions. Let's now cross to the NSE to get a sense of where it is trading right now. Rosalind Oluyede, Senior Associate at BGL, is standing by for that discussion. Rosalind, thank you for joining us. And so what's the update? What I'm hearing is that the market is recovering a little bit in early trade.
Well, yes, market is up by 0.3% now, basically by banking stocks that have been oversold previously. So we saw the likes of GT, Zenith, FBN that have traded like 5% down. They are top on the gainers list now. And then, of course, the announcement by USAN of the 51% stake in Port Paint is also rallying price for that stock. So that one also is 10% up. So basically, we have this early rally that is likely to shape the course of the week.
All right, and you just mentioned the USC transaction with Portland Paint. Now you mentioned that the Portland Paint share price is up 10%. What about USC? How is the market reacting to this? Because USC, you feel like it has gone on an acquisition spree. We know it invested in livestock feed. Now it's buying Portland Paint. How is the market rating the stock right now?
Yeah, well, for now, the stock is like trading flat. Don't forget that they just did a 1-for-4 bonus and then dividend. So we saw a situation where people are really taking, cashing out on that one.
Right.
But basically, value investors, they are pricing all these acquisitions into the stock, and then we'll likely see further appreciation in that stock as well, being the mother company of all these acquisitions. So
right.
I see, yeah.
Right, okay. So some positive news lifting the market in early trade. But do you think this momentum will be sustained, though? We have seen the market fall back of the last 2 sessions, like I mentioned.
Yeah, the good thing is that we saw that the market is providing support for it at 35,000 basis points, which is very good. And then there's a little bit of resistance at 40,000. But by and large, the market, we expect this kind of discipline where markets will get to a high and then it will correct itself. For me, the correction is good. That is the kind of discipline that we didn't have in 2008, and then we had the bust. So it is good. If it is low, and then like we saw this morning, people will price it and they will see value there. There will be bottom fishing opportunity, and then people will enter. So by and large, we see some stability. And then majorly, when we now have news around some stocks, they will spike to be able to take it to the desired threshold. So it's good. And I see this particular trend being sustained.
Rosalie, I'm sure you know the NASD, the OTC market, kicks off today, effectively after the launch yesterday. And I want to get your thoughts on the impact this is likely to have on the stock market itself. And I think what's interesting about the OTC market that was launched yesterday is that the NSE is actually a shareholder in the process. Members of the NSE are actually on the board of the NASD. So there's definitely some collaboration between the two.
Yeah. Well, one good thing about it is that investors now have some bouquet of investment. If they are not too comfortable with the quoted stock, they can now go to the non-quoted one. But basically what I see is more transparency around the OTC. Before now it has been like a shadow market. Now we are going to see real, price discovery for those stocks, number one. Number two, I see liquidity being moved because so many, don't forget that in the event of those private placements in 2008, so many funds have been logged in this.
Right.
So I see liquidity, being moved from there back to equity, and then when there is appreciation, higher return, by and large, I think it's good for the market, which is why I think NSE quickly latch on this. So it's a symbiotic thing. It's good for the market. It will create the necessary depth. It will create versatility, diversity for companies, and they have a bouquet, of market to choose from. Right,
but how quickly do you think this is likely to grow, though? You just mentioned that there's definitely a pipeline of potential listings on that platform, given the private placements we had in 2007 and 2008. So clearly there are some people that want to get out of some of those investments, and this market provides that platform. How quickly do you anticipate that this market will grow?
I think, yeah, for now, what we are looking at is just for infrastructure building, and then brokers. There are so many brokers that have not lashed in on that system. So basically what we are going to see now is the traditional OTC, the likes of WAMCO, the likes of Consolidated being traded, because those are the ones that are traditionally being traded on OTC. But by the time you have brokers fully lashed on it, they've gone past the registration stage, we are going to see new offerings in that market that will develop it further to be able to make it very buoyant for new investors to come in. But I think it's a good development. It's a very good development.
Right. I totally agree with you on that point. I think it's all providing some depth particularly for investors in those private placements that we mentioned earlier. All right, so what's your take on where the market goes from here, though? And I want to get particularly your thoughts on the impact of the interest rate environment on the stock market right now. We've seen interest rates in the fixed income side of things move up quite a bit over the last few weeks, and some people are saying now that some pension fund investors who were investing in equities have perhaps a reduced appetite for equities now, and they are probably going to start moving into fixed income securities.
Yeah, don't forget that what actually led to that rally in that market was because of the fixed income that was into JP Morgan index. And therefore, they pumped in so much money, and then yields hit the roof, and then it becomes so attractive for many of these IP. They came to stock market. Now they are seeing opportunity because these so-called institutional investors, they've left it, yields are going high. So for me, I think by and large, what we are going to see is that there will be movement. Don't forget that money will change the higher returns. They will go to higher income because opportunity is being provided there. But then when they see opportunity also in the market for stocks, specific stocks now, that will provide yield return, they will also come back, and that will provide the stability. So for me, the interest rate regime now might be favoring bonds now, but we also have some stocks that are promising higher return than those ones that will make them to stage a comeback to the equity market.